If ETFs still confuse you, it's not because they are complex. It's because most beginners are being taught the wrong way. Right now, millions of people are building wealth with ETFs, while beginners stay stuck, overthink, hesitate, and miss years of growth. If you don't fix this confusion early, ETFs won't feel safe. They will quietly cost you your future returns.
Let's be honest, if you are new to investing, opening your first brokerage account can feel overwhelming. You hear terms like mutual funds, ETF, index funds, and suddenly you are unsure what even makes sense.
Should you pick individual stocks or just put money somewhere safe? That confusion is exactly why beginners hesitate to invest,
even when they know it's important for their future. But here is the thing, it does not have to be confusing.
Today, we are going to break down ETFs in the simplest way possible.
So simple that if you have never invested a single dollar, by the end of this video, you will know exactly what to do.
By the end of this video, you will clearly understand what ETFs are and how they actually work in the real market.
You will also understand why ETFs are often considered one of the safest and smartest choices for beginners. You will learn how to pick your very first ETF confidently, without feeling overwhelmed by complex choices.
And most importantly, how to start investing without stress or confusion. Even if you have zero experience, just stick with me.
I promise it will make sense by the end of this video.
Imagine this. You could be the owner of hundreds of top companies, like Apple, Microsoft, and Amazon, all in one single investment. You don't need to spend hours researching every stock. You don't need a finance degree, and you don't need to risk your savings on guesswork.
That's the magic of ETFs. And today, I am going to show you exactly how beginners like you can use ETFs.
So what exactly is an ETF? How does it actually work? And why do so many beginners choose ETFs over individual stocks?
Let's dive in step by step, and I will explain everything in the clearest, simplest way possible.
All right, let's start with the basics. What is an ETF? ETF stands for Exchange Traded Fund.
Now, before your eyes glaze over, let's make it simple. Think of an ETF as a basket of investments.
Kind of like a fruit basket, but instead of apples and oranges, it holds stocks, bonds, or even other assets. When you buy a share of an ETF, you are basically owning a small piece of every single thing inside that basket.
For example, an S&P 500 ETF contains shares from the 500 biggest US companies.
That means, with just one purchase, you are instantly invested in Apple, Microsoft, Amazon, and hundreds of others. You don't have to pick individual stocks, and you don't have to worry about missing out on the top performers' parties. The ETF does that automatically. This is why ETFs are so beginner-friendly. They give you diversification, spreading your risk across many investments, please, in just one simple purchase.
And the best part? You can buy and sell ETFs on the stock market just like individual stocks, or sneers with the products. It's literally investing made easy.
Next, let's talk about how ETFs actually work. ETFs are managed by professionals called fund managers. Their job is to make sure the ETF tracks a particular index or sector. For example, a total stock market ETF tries to mirror the performance of the entire US stock market. ETFs are traded on stock exchanges, which means their prices change throughout the day based on demand and supply, just like a regular stock. But unlike buying a single stock, when you buy an ETF, you are automatically buying small portions of hundreds or thousands of companies at once. Another important feature is the ETF's net asset value, or NAV. Don't worry, you don't need to memorize the term. Just know this, the NAV represents the total value of all the assets inside the ETF divided by the number of shares. It helps you understand the value of your investment.
And here is the kicker. Most ETFs aim to replicate an index, so you don't need to guess which stock will perform best.
You are basically riding the growth of the entire market with minimal effort. Now let's talk about why are ETFs such a popular choice for beginners. First, diversification. As I mentioned, you are spreading your money across many investments, which reduces risk. Second, lower fees. Most ETFs charge very low management fees compared to mutual funds, so more of your money stays invested. Third, simplicity. You don't need to research 50 individual stocks. One ETF can give you broad market exposure instantly. Fourth, flexibility. ETFs are traded like stocks, so you can buy or sell anytime the market is open. And finally, long-term growth. Historically, ETFs that track major indexes like the S&P 500 have provided steady growth over time. For beginners, this combination of low effort, diversification, and historical returns makes ETFs almost a no-brainer. Let's make a quick comparison. ETFs versus individual stocks. Buying a single stock can be exciting. Maybe you pick Apple or Tesla. But it's risky. If that stock falls, your portfolio takes a hit. ETFs, on the other hand, automatically spread that risk across many companies.
Think of it like this. Buying a stock is like putting all your eggs in one basket.
Buying an ETF, you have got hundreds of baskets. That is why ETFs are safer for beginners.
You still get exposure to top companies, but with much less stress and fewer chances of making big mistakes.
Not all ETFs are created equal, especially for beginners. Let's focus on three types. Index ETFs. These track the performance of a market index, like the S&P 500, most popular for long-term investors. Total market ETFs. Similar to index ETFs, but they cover virtually the entire stock market, giving you even broader exposure. Sector ETFs. Focus on a particular sector, like technology or healthcare. Beginners should be careful here. They are more volatile. For absolute beginners, starting with an index or total market ETF is usually safest.
Let's look at real ETFs you have probably heard of. VOO tracks the S&P 500, low fees, very stable.
VTI, Total US Stock Market ETF, excellent diversification. QQQ, tech-heavy ETF, higher growth potential, slightly more risk. These ETFs are popular because they are beginner-friendly and widely recommended. By investing in just one, you are essentially owning hundreds or thousands of companies with a single click. When picking your first ETF, focus on four things. Expense ratio, lower is better. Diversification, more companies, safer. Historical performance, look at long-term trends, not short-term hype. Risk level, decide how much volatility you can handle. Start simple, pick one ETF, invest regularly, and keep learning. You don't need to be perfect. Consistency beats timing the market every time. Finally, how do you actually buy an ETF? Open a brokerage account. Apps like Robinhood, Fidelity, or Vanguard are beginner-friendly. Search for the ETF ticker, like VOO or VTI. Decide how much to invest. Even $50 a month works. Place your order and confirm. Consider dollar-cost averaging, investing small amounts regularly rather than all at once.
And that is it. You are now an ETF investor.
Before we wrap up, here are some mistakes beginners make. Buying too many ETFs? Over-diversification can dilute returns. Choosing high-fee ETFs? Eat away at your growth. Short-term trading. ETFs are designed for long-term investing.
Ignoring market history, panic selling in dips can harm long-term gains.
Avoid these, and you will be ahead of most beginners. All right, let's quickly summarize everything you have learned today. ETFs, or exchange-traded funds, are basically baskets of investments.
By buying just one ETF, you are automatically investing in dozens, hundreds, or even thousands of companies,
instantly diversifying your portfolio. This is why ETFs are so beginner-friendly. They reduce risk, require less research than picking individual stocks, and provide a simple, long-term growth strategy.
We also covered the main types of ETFs for beginners: index ETFs, total market ETFs,
and sector ETFs, and looked at real examples like VOO, VTI, and QQQ. Remember, the key is to focus on low fees, broad diversification, and your comfort level with risk. Investing may seem intimidating at first, but starting small with ETFs makes it simple and manageable. Even if you only invest $50 or $100 a month, Over time, the power of compounding can grow your wealth significantly. The most important thing is to start, stay consistent, and avoid common beginner mistakes like over-diversifying or chasing hype.
If you found this video helpful, do me a favor. Hit the like button to let me know, and drop a comment below.
I read every single comment, and your feedback really helps me create more beginner-friendly investing guides. And if you want to take your learning one step further, check out my next video, ETF versus stocks, which is better for beginners. It's a complete guide to help you decide where to put your money for the best results as a beginner. Remember, starting now, even small steps, can make a huge difference in your financial future. So take that first step today and let ETFs work for you.